Good afternoon, everybody. Just doing a quick AV check here. I realize there might be a bit of an echo, and for that, I do apologize. I'm on a different CPU today and getting a few things set up, et cetera, et cetera. So I appreciate your patience, but hopefully everything is looking good. Hopefully everything is looking good. So. Anyways, welcome. My name is Joe. For those of you who don't know, it is our 1 o'clock slot today to open up the week. And as everyone saw, there was a bit of a break this morning with the Dow taking a pretty big dip off the open, currently down 100 points. And then the ES is back at scratch. NQ up about 60 points. Nothing big there, but lots of movement. We'll go through that, of course. CL a bit choppy, up a quarter. And gold back at scratch as well. So let's take a little time to walk through these step by step. I'm trying to come up with a potential move or a potential trade going into the end of the day that I can put you folks in before I leave you at 2. A T99. Yeah, I don't know about that. I do have a T99 right next to me. The same calculator I've been using since I was about 14. Magically, it has managed to stay with me through junior high, high school, college, post-college, New York, et cetera, et cetera. But yeah, life's good, huh? Life's good. All right, so let's take a look at the start of the day here. Moving sideways to open. We had a beautiful breakout signal here in the Dow going in. So our initial or our overnight low was at a time of 7:40 a.m. Right. So as most of you know, I try to avoid taking any sort of trades Monday prior to 9 or 9:30, just waiting to see how the market's going to shape up and then ship out. So again, we've got this overnight low here at 38.30, and this is the S&P. I believe I said Dow, but this is the S&P here at 38.30. And our high going in was 38.53, so 23 points. So as you know, 23 points in the ES is fairly narrow, right, for a daily overall range. So when we have a tight overnight range, that gives the probability or the hit ratio for success of a breakout trade much higher. Okay, so going into the open, or I should say after the open, right? Going into the open, we were looking upside, of course, right? Looking upside as the market was holding steady with that low down here at 38.30, rallying up to 38.52 approximately, right? So set up for a breakout trade had we made a new high at 38.54. That new high was not achieved, and thus the breakout signal was not called or was not valid. Okay. Now, as we meandered neutrally to, as time progressed to the right here on the chart, fast EMA then crosses slow, right? Fast EMA goes through VWAP, slow EMA goes through VWAP, okay? and we make a new low right here, 2 points, two points below the low at 38.30. Okay, 38.30, launching our breakout signal. Boom. Catch that move here at let's call it about 9:58. 9:58. Okay, so that's when the signal is activated in the S&P. Okay, so now let's take a look at the Dow, and we will come back to that, of course. But let's toggle over and look at the Dow. Okay, now the Dow at that time, okay, at 9 o'clock, was also rallying up with the S&P. And then that break in the Dow occurred at what time? 9:58. Okay, so going into that move, okay, you can see the Dow is at that point in the day already had a 400-point range, right? With the high at 31,000 and a low down here at 30,700-ish. A little lower than that, but point being, it had a very wide range at that point, right? Okay, so know that the Dow had a wide range, wider than the ES in terms of standard deviation. Okay, and once we saw that break in the Dow, okay, new low in the Dow, time of 9:58. Okay, wonderful. Let's toggle over to the NQ and see what was going on there. All right, nice little story over here in the NQ as well, right? But at that point in time, with a high of 13,550, a low of 13,350, give or take. At that point in the day, it was a 200-point range, kind of within a standard deviation, but somewhat wide, right? And so the NQ made a new low, the YM made a new low, and the ES all made a new low at the exact same time. Okay, but which contract at that point in time had the smallest range? With respect to standard deviations, i.e., we typically see ranges of 500 points in the YM, 200 points in the NQ, and 50 points in the ES. Now going into that time frame at 9:58, the range in the ES again was only 25. So we expect the ES to move, for the sake of discussion, a minimum of 25 points, right? So which of the three would you take? Which breakout signal has the highest probability of success? A, and B, the largest or the higher probability of a large movement. We'll call it a large movement. Well, quite clearly, it was the S&P 500. Okay, so we sell underneath 2 points, 1 to 2 points underneath that low of the day. Okay, now in addition, right, we're selling underneath an HVA. That's not up on this screen, but again, all those HVA levels are in the newsletter, and I got this new CPU, so unfortunately I can't pull it from a different CPU to this one, but I'll have that resolved by Wednesday here on my next session. But anyways, to continue forward, breakout signals in full effect, right? Now as you know, we always want to cover one with the limit order sitting away from the market. Okay, sitting fairly far from the market. So generally, you're going to want to have a limit order at 25 points away from the high. Okay, meaning 25 points away from the high here, that's where we get in, and 25 points below that, giving us a full 50-point range. Okay, thus we would be taking one off at 38.53 minus 50 to 38.03. Okay, now I actually took my first one off at 38.08, right? I sold 28s, bought 28s, right? Now, that's thus netting what? We are netting 20 points there, okay? The next trail we have is we have at evens, right? Once a market breaks through evens, okay, we expect there to be a pretty tight pullback. So how you manage this second lot, totally up to you. Simply could have put a stop loss right behind the 3800s, or you could have been a little bit more aggressive on the dip and tried to take one down here at about 92.5, as we did have another HVA at 37.90. Okay, as the market ticks back up, you either exit when these EMAs cross, or if you have a trail on that third lot right behind the EMA, as you see my mouse dragging along, you would have gotten taken out at 38.05 versus the cross price, which has been 38.03. So, however, whichever stop loss or whichever exit method you used, you would have made money and collected at least 20 to 25 points from the sale up at 38.28. Okay. Now, point being is, if you have three lots, I like to use three different exit methods, right? One, collecting profits. Two, a trail, giving it room to run. And then three, trail style number two, right? Or these EMA crosses, right? So when we have these big breakouts, right, we don't want to be, digging into too close to these markets, right? We want to be trailing it behind this slow moving EMA. Now, what was nice about this is the slope of this EMA is very steep, i.e., we're holding it for a shorter period of time, right? I mean, this trade lasted all of 10, 15 minutes, and then you're back in. Okay. Now, if you want to be aggressive, of course, you can look to stop out and reverse it here. But at this point, you just took three lots, a good deal downside, right? So if you're looking for a reversal, I certainly wouldn't take more than one or two. Generally looking to take one and to bring that back up towards the VWAP. Okay. Now on Mondays is my least aggressive day of trading, as all of you know, due to the fact we're waiting for the market to find its sea legs as we move into the week. Okay. As we move into the week. So taking that reversal back to the upside on a Monday with more than a lot, two lots max, is simply not something I'd be looking to do because I don't want to give away this nice big profit that we took. Okay. Now, having said that, right, we just collected about 25 points on three lots, so 75 points. So it's quite reasonable to risk 5 points on two lots. Worst case scenario, then you lose 10 points off of your 75 points you just gained, and you still got 35 points of SPOO profit, right? Now, if you get long on the turn here, let's say you get long at 38.05, well, you look to take one off near an HVA at 38.20, and look to take one off at the VWAP near 38.30. Okay. Thus, averaging 25s, having bought 05s, that's another 20 points on two lots. Okay. Bringing your total up from 75 plus 20 to 95. And there's 95 S&P points total right there. Okay. And then you're pretty much done for the day going into lunch, right? And that's your Monday. You know, that first trade's 10 minutes, 10, 15 minutes. That second trade takes about 45 and you're done. So obviously, so in that movement, right, what you're looking at is the fact that the market moves so quickly, in my perspective, is enjoyable because I'm warehousing less risk at a lower period of time, for a lower amount of time, a lower period, if you will. Okay, so what we like about that is it's just 2 trades, 2 positions, and boom, we're done for the day, right? Avoiding this chop going in. Now, the most important factor or thing to recognize about this trade, which I certainly have been hitting on many, many times, is that the S&P was the horse we wanted to bet on, right? The S&P was the horse we wanted to bet on. Now let's take a look at the NQ and see how that would have turned out. Now I will note I did not even trade the NQ. I only took it in the S&P, right? It was a much safer trade in my humble opinion, a much safer trade in my humble opinion, and thus giving me a lot more confidence to assign more risk to the S&P. Okay. Now, where did this thing go? Come on. All right. Let me get this chart back in line. It's misbehaving. Okay. There we go. Now, let's look at that NQ there on the break. So we got a new sale, or new low, thus pulling us into a sale. Now, it depends on how tight on this you were. But had you taken the NQ, you would not quite have gotten pulled in. Because on the NQ, we're looking for 5 points of a new low. So this new low at 958 would not have triggered a short position. Okay, would not have triggered a short position. All right, so your new short is not triggered until here at 1330. Makes a low down here at 13,200. EMAs don't cross until about 1330. So you certainly could have taken 100 points out of the NASDAQ as well. But here's my thought process is, instead of adding to that, taking that NASDAQ trade, I would rather just double my size in the NQ, because that certainly struck me as the more formidable move. Okay. And just want to put a quick chat across and make sure everything's working well. If someone could respond to my IM, that would be great. I want to make sure I'm seeing everybody's comments here. Okay, good. Thanks. Thank you, folks. Test received. So does anyone have any questions about that? There's taking 100 points out of the NASDAQ is pretty freaking awesome. Don't get me wrong. But I just simply felt that the ES was the way to go. Now, alternatively, the other option that I would consider is taking one lot in the NQ, okay, and just kind of seeing, all right, and kind of taking that one lot in the NQ, because at that point, right, at 10:03, our S&P trade was deep in the money, right? and our stop loss were all pulled to break even, et cetera, et cetera. So why not just toss on a one lot and trail it with the slow EMA and see how far that thing goes? Okay, so that is your other option, and quite frankly, a great option to take if you are moving in one direction or the other, and if you are actively taking all of these trades. All right, so question here is, why not consider the short in the S&P at a higher price? And it's a good question with a simple answer. Now, so you can, if you're looking at this, right, I could have taken a long here when the EMAs crossed. I could have taken a short here. I could have taken a long here. I could have taken a short here, et cetera, et cetera, et cetera, right? But I want to be a bit more hands-off, right? Because at this point, I'm being a little bit, this is a real aggressive trade. This is a moderate trade. But going into this trade, right, we've only traded sideways. So I was not keen on entering a trade inside of a tight range as we continue to push up till all-time highs. If I'm going to take a short, I feel more comfortable taking a short with a breakout, and it's breaking out of a narrow sideways range. You can certainly, get a bit more aggressive and sell one here, but if you look back, if you had done that at 840, you would have got stopped out. Okay, so the thought process is, let's wait and be patient for that bigger move to come, right? Let's wait and be patient for that bigger move to come. And so if you're trying to be cute inside and out, that is a way to kind of churn through a lot of commissions and fees, right? And our objective is to wait a little bit and wait, especially on a Monday when we're just trading in this tight little insight range with, who the hell knows where we're going to go or what we're going to do, because there's no additional signal or no additional indicator in my view other than EMAs, right? I need more than EMAs to signify a trade, right? This isn't enough. Just seeing white cross under yellow is not quite enough. And then seeing price, you know what I mean? And that's in certain situations, right? The thing is, in this situation, I didn't feel there was enough. Now, that is not to say, obviously, had you done that, you would have made money. However, had you done it over here, you probably would have lost money, right? So it depends, right? And the idea is to be patient and wait. Now, the other option, of course, is you can add one when the slow crosses, or one when the fast crosses, one when we make a new swing low, and add your third when we make that other low, that ultimate low, right? And then you're scaling in, you end up being short from 40 instead of being short from 28. Approximately. Well, you really be short from like 35 or 40, right? Because you're selling one at 42, you're selling your next one at 36, and then you're selling your last one at 28. So 28, 36, 42 puts you right up here in mid 30s. So you do collect, 7 points, approximately 7 to 8 points built into the trade, but on a Monday morning, that's not my style, because I have found if I do that on Monday mornings, I tend to get burned and tend to churn and et cetera, et cetera. So if it was a Tuesday or a Wednesday or a Thursday or a Friday, yeah, definitely. And because at that point, the market has found its sea legs. People know what they are doing. They're initiating risk, taking off risk, and there's a bit more of a pulse that we can identify. Whereas on Monday morning, the pulse is, we're in AFib, right? The heartbeat is not been quite solidified, i.e. the bulls have not taken over, the bears are not taking over, and we're chopping up sideways. So one of the advantages of the breakout signal is that we are using it with the intent on avoiding chop. So that's even more insight into why we do like this particular signal. Okay. So now the question is, would it be too aggressive to short right now as the EMA is to have crossed? So my thought would be yes. We are back up into this kind of choppy zone, right? And we have, if the market had, I would say this, hit the VWAP and reverse. But here we hit the VWAP and go through. So at this point, I think chop has certainly been established, right? And I have, now we're back to break even. So going into the final 90 minutes of the day, I have no solid prediction of what we would do. Now that would be, or where we're going to go. Now, if the market had failed to pop through the VWAP here at noon, 11:45, then I would be a bit more bearish, and I'd be looking at the S&P, or excuse me, looking at the Dow and the Nas to lead us one way or the other. But let's take a look at where those are now in relation to the S&P and see if we can get somewhat of a clue. Hint, I've already done that and don't have a clue, but let me explain where, why, and when. Okay, so we look at the, let's get this Dow here, and it's kind of the same story in the Dow, right? It's the same pattern. If we were to lay these on top of each other, here at 11:30, the Dow rallied through its VWAP and is kind of sitting up here in no man's land, right in the middle of the daily range and above the downside move, i.e. that is laid out clearly here by the VWAP and sitting up here. Okay, and sitting up here. So we're looking for this bad boy to turn and come down, but it didn't. It rallied through. So if I were gun to my head going to take a trade, I'd probably look for the Dow to break the VWAP here at 740 with a stop at about 780. Okay, but again, that's kind of a middle out trade in the middle of the range with no clear direction and without any correlated products to boot. Okay, well, all right, let's look at the last correlated product. And of course, the Russell as well, but the correlation with the Russell and, the three main indices, of course, is a lot looser. But we will take a peek at that in a moment. So, okay, we look at the, let's take a look here at the NASDAQ. Okay, so the NASDAQ currently trading 61 points in the green. And let's zoom out and take a look at everything. And then we'll go back to the NAS. Okay, so ES trading 2 points up, Dow trading 100 points down, and NAS trading 60 points up. So a half a percent up in the NAS, a 0.5% down in the Dow, and flat in the ES, right? So it's a coin toss on where we're going to go, right? Which kind of says, I don't know. Now, if we go back, and then the Russell is down 0.7%. As it stands. So not a lot of symmetry in terms of bullish versus bearish. However, there is symmetry looking at the patterns, right? Breaks here at about 10, rallies back to the VWAP at about 11, rallies through the VWAP at 12, okay? Break here at about 10 in the Dow, rallies back to the VWAP at about 11, and then rallies up through the VWAP at about 12. And then let's look at the NASDAQ here. Breaks here at about 10, rallies back to the VWAP at about 11, and then rallies up through the VWAP at 12. Okay, so here's where the kind of the gamble comes in, right? We're waiting to see. All right, do we think? And this is really what it comes down to. Do we think the market's going to finish scratch on the day, up on the day, or down on the day? Well, if you're bearish, what do you want to sell? You want to sell the NASDAQ because you're thinking it's going to, at a minimum, come back to scratch. So you got 70 points. If you're bullish, right, you want to buy what's cheapest, which is the Dow, down 100 points. The one issue that you have with that theory is you're buying the weakest thing, which in theory has the least chance to get up, and vice versa with the NAS. Okay, so that's what makes putting on an equity position at 1:30 p.m. with 90 minutes to go challenging, right? Is there's a lot of things pointing in different directions without a hell of a lot of clarity from anything, right? So okay, and then let's take this one step further. The bearish run is done. The bearish run is done, right? It's certainly reasonable to assume that it's going to break. I would go so far as to say it's not. I don't want to say unreasonable, but I would doubt we make new lows from here. I think that's doubtful. Okay, so a potential trade here in the NQ, as we see, we have this ridge. Let's say you're bearish. We have a ridge at about 50 here, right? 450, 13,450. So we look to sell 13,445s or 440s with a stop loss at 460. So 15 to 20 points. Okay, and we're thinking the market moves 70 points back down to settle. And it would really be more like 85 points if we got the 45, 84 points. Okay, so that's a good risk reward trade if you're bearish. But you need to have some additional, but you have to be fundamentally bearish to take this trade. You'd have to have, you might even want to wait for a lead from one of the other products. Now you could get real tight on this with sell 45s and a stop at 55, okay, and try and only risk 10 points. But you would need that pop up. Now it almost got there a moment ago with the swing high at about 40, 41, 42, 43-ish, right? But no cigar in the 45. So then you say to yourself, well, why don't I just sell 40s? Well, that's fine, but then you're adding 5 more points of risk. And do you want that? Okay. Okay, next thing, let's take a look at these swing lows. That was down here at 13,313, right? So then you say to yourself, well, if the swing lows are 120 points away, and I'm only looking for 75 points, it's reasonable to assume if it breaks, it will break towards those swing lows, but it doesn't necessarily have to hit them, much less go through them. Okay, so that's why this NQ short is actually a nice risk reward trade and has a relatively acceptable hit ratio. The only problem is that the hit ratio gets challenged because we don't have any additional factors to feel bullish. Okay. So question is, do I know if today's ES chart has a name? There are, every trader has different vernacular, etc., for, what they feel or how they're going to define it. I won't get into that right now, but yeah, I would assign a name to this particular. Let's say I just described it as the flying V, right? And that's often what I use. The flying V is we went down and came back up, so we made an actual V, right? And we're potentially flying higher, but we have that in all three, and we're just hanging out, but we have not actually completed the V up to the top. So that is a consideration that you want to think of as well, as we haven't quite completed the upside move, so to speak, and we're not terribly bullish either, or excuse me, terribly bearish either. So that makes this trade a bit more of a gut feel trade. The HVA levels are all in the newsletter. So if you have the newsletter, all the HVA levels come out every other week, and that's how you can see all those HVAs. Okay, so let's zoom on out and look at everything. No apologies necessary. Okay, so we're remaining flat at the moment, right? And we know at 2 o'clock there's going to be some movement. There's going to be some movement. Now, best case scenario for the short, I believe, would be a bit of a 5 to 7 point pop in the SPOOs that's met with resistance and selling this back down. If that were the case, then I would be a bit more comfortable looking to take this NQ trade. The problem with that philosophy is if the ES pops 5 to 7 points at 2 p.m. rolling into the final 60 minutes, it's fairly safe to assume that the NQ is going to pop up through its ridge here at 13,450, thus taking out those swing highs, thus giving our stop loss lower credence, if you will, right? So that's where things get tricky. That is where things get tricky. Thus, no position right now. Okay, because we're slightly down on the day, sort of, but no, we're just completely neutral on the day with one big downside move, and the thought is that downside move is done. So, okay, but let's take this one step further. Let's say you've done really, really well, right? And you took that S&P breakout, and then you took that S&P little reversal, and you got those 95 points I was talking about earlier, okay? And you got those 95 points I was talking about earlier. Well, it would behoove you to risk, 10% of those profits for another really big move, right? There's absolutely nothing wrong with that. But you don't want to do that for the sake of doing it, right? But it is important, right, when we have these big up days, that it is fine to risk 10% on the next trade. Absolutely fine, okay? and quite frankly is often recommended because that's when you're working with house money, right? And you could really have a kick-ass day if things go your way. But you don't want to put a trade on for the sake of putting a trade on, right? You want to make sure you're doing it for the right reasons. Now, with that said, when you see it, you got to do it, right? If the indicators are all pointing to the downside and you decide not to take the trade and it becomes a big winner, or even a moderate or small winner, then that's going to screw up your hit ratio, right? Because the next trade, if you have 2 winners in a row and your hit ratio is 65%, it stands to reason that the trade after that will be a loser, right? So if you're not taking the winning trades, but you're only taking the losing trades, then things get all jacked up. Okay. Okay. Let's see. Market profile would term today's day type normal variation because it only breached one side of the initial balance. Neutral when it breaches both. Called normal when either side of the IB is breached. So that terminology that Neil was kind enough to express with you folks has to do with that IB, which is the initial balance. And Neil, when you say, are you referring to that first 30 minutes or are you referring to flowbacks through 90 minutes? That people often use those interchangeably. But what Neil kind of spelled out, I believe, is very similar to the exact reason I took that S&P trade, is because the breach, well, I could take it a step further. Once the breach occurred in the S&P, the thought was that breach had a lot of downside room. First hour, okay. So 8:30, 9:30, which makes sense because that trade was signaled at 9:58, right? Eastern or Central, excuse me. So lots of methods to kind of get yourself into that particular trade. So let's toggle over now and look at gold. All right. So looking at gold here, gold's been very neutral on the day. It's literally a scratch this instant. Okay. If I only gave you winners, you would not have to worry about which one you took. Yeah. If I only had winners, I probably would not share them. I'd be a billionaire and not teaching the method. Just kidding. I love you guys. Of course I would. Of course I would. Okay, so gold's had a pretty, I don't want to call it a tight day, but in terms of some of the movements we've had in gold of late, I'd be willing to say it has not been a performer by any means. As you can see, trading right in the middle of the range. We take a look at this breakout trade at 7:20. It goes nowhere, right? We take a look at the breakout trade we had at 10:14. That goes nowhere. Now, that is a decent breakout trade in gold, right? 20 points so far. Certainly have the opportunity to continue to run. And that is the signal right under an HVA at 1847.5. So that's a decent setup. Right, that's a decent setup. And then we have we put our stop loss down here or up here at 1852.5. Just didn't work out. Okay. Now the other thought process, or in addition, right? We just saw the equities dump, right? But let's see what the equities are doing when it does make this new low at a time of 10:13. So I'll toggle back over to the S&P. Equities are moving back up, and that's when we take that upside reversal. Okay, so that's the S&P, and we'll make a note that the gold trade was signaled at 10:15, and the upward trend or the upside bullish signal in the ES occurred at 10:11, i.e. before. Exact same thing here in the YN. Okay. So we see that the gold is either lagging or has lost momentum at 10:15 when we take that breakout signal in gold. Thus, we use less size and a tighter stop. But it's certainly a decent setup and something worth taking. So let me go back to gold and show you that one more time. Okay, so 10:15, right? The low at that point in the day was about 1847. The low at 10:15 occurred down here. I'll call it about a point below at 1846 half, right? But boom, it got rejected real quick, real quick. So that's kind of an example of a failed breakout. Okay, the conditions were fine. But what we had going against us, I think I need to roll all these over. Actually, they started rolling over today, so I'll get those rolled over in a moment here. But the prices change. Well, not the prices, excuse me. The patterns are the same. Now, the other thought, yeah, so we have that HVA at 1847 half, and so we break through it, right? So that gives us another kind of indication that this is a decent breakout signal. Okay. The one thing that gives us pause on going in with all of our size is that all three equities just turned and started to go higher. Right? Had this breakout occurred at 10:05, right after the time that we entered the shorts at 9:58, that would have been a little bit more helpful and a little bit more bearish, and it would have been an indication that gold was going to keep breaking with it, but it stayed inside of its range. All right, that happens, no big deal. Let's move on. And here we have gold. Or excuse me, crude. I took a middle out trade in crude over lunch. It's not something I usually do. And then said to myself, this is silly, and just scratched it. And here we are higher. Oh, well. Really nothing doing in crude today, right? Only real trade here is fading these breaks. But I'm not bullish enough crude to be fading small 50-cent breaks right now when equities were, tumbling, specifically the Dow dropped 500-600 points. So wasn't too excited about picking up crude down here. And then that's cut, but as it rallied back up to the VWAP going into lunch, I figured, this thing might move, but I elected to step out of the trade. And I'm glad I did. It wasn't really worth babysitting. Sitting here monitoring risk on short day trade positions during lunch. I have found is a waste of time. The amount of money I make or lose versus the amount of time I spent doing it is not terribly enjoyable. And half the time you come back, it hasn't moved, which is fine. But for some of these types of trades, you want to see some development and warehouse that risk for a shorter period of time. And there are better things to do on your Monday than sit here and look to take short-term day trades, in my humble opinion. And that's just based off of the strategies that I employ. Okay. So we have 10 minutes left here. We have went through products. So let's take a look here at the Russell. Big move up here in the Russell, right? So if you were watching the other couple of SPOOs, Dow and Noodles, S&P 500, Dow Jones, and the NASDAQ, you can see here at 9:58, that's when we took those other two trades. We had that short signal initiate up here at 9:51, initiate here when EMA fast crossed, and then that third one down here at 10:04, right, when we made that new low. So several opportunities to get into that Russell short as well. But as I said, unless you kind of jumped on that short when everything else broke, you were trading it right in the middle of the range in what had at that point been a sideways market. But prior to that, the Dow had come off 500 points. So selling the Russell here, certainly fine. But as I said, looking at the S&P short at 9:58, and then following that up with a 1 or 2 lot short in the NQ at a time of 10:05 was pretty cool, right? Because again, let me show you that, because we didn't make that new low in the NAS, that new 5-point low, until 10:03, right? And at 10:03, okay, it moved 100 points. So you collect 100 points there on the NQ. Now let's take a look at what was going on at 10:03. At 10:03, the NQ, or the ES trade, was already time of 10:03, 20 points in the money, nearly 15, 20 points in the money. Now let's call it 10 to 20. Let's say you got it at 28, right? You got it at 28 at time of 10:03. I was trading about 12. We sold 28, so let's call it 15 points, 15, 16 points. So it's already 15 points in the money on 3 lots. So you've already got 45 points on your ES trade, right? So at that point, you say to yourself, well, okay, I can certainly risk 10 to 20 points on the NQ trade to make 100 points, which is a 1 to 5. And let's say you only risk 15. Let's say you only risk 10. Well, that's 1 to 10. So that is the scenario in which you say to yourself, well, I have to take this trade. It's too good to ignore, right? Now, using the phrase "I have to" certainly brings up some challenging rhetoric, which then transfers over to challenging psychology. Okay. We don't ever want to be in a position where we have to take the trade, right? But what you want to say to yourself is that everything in this system indicates take a short. So it's best practice to take the short, okay? So let's call it best practice, right? Saying have to can kind of screw with your head. I've been doing it long enough where I don't look at have to as a definitive, but it's more like probability dictates that I should really take this trade, and I can't really come up with a logical reason to sit it out. Right now, there's nothing wrong with just chilling and waiting to see what happens and waiting for the next one. But part of trading is being prepared and planning, right? And if you plan and you prepare and the perfect setup presents itself, well, then you enter the trade, right? This is what you've been planning for. This is what you've been waiting for, right? So there's that philosophy of, playing the numbers, right? And the numbers say this is a great trade. The risk is minimal compared to the reward. And so, boom, you give yourself a good deal of cash if you take that trade, right? That's a lot of money. So, anywho, just kind of a picture perfect trade. 2 positions or 3 positions, a short in the SPOOs, then a short in the NAS, then a long in the SPOOs. All 3 of those were winners. A short in gold, which was a loser. Okay, and that's that. And you're 3 for 4, 75% hit ratio. And I can tell you your wins were significantly larger than that loss, right? And that's what it's all about. Now the system still works if you're risking 4 to make 5, but imagine how well it's going to continue to work if you're risking 1 to make 2. Or in this case, it turned out to be about 1 to 4, 1 to 5. So pretty darn big, right? And that is all about catching the large breakout moves and trailing it along those slow EMAs and not cutting yourself off at the feet, or not cutting yourself off at the knees. But I would like to remind you, I will have a target in here somewhere just sitting in the market because it's not going to break forever, right? But we want to, the objective is to cover 5 points below the low of the day, right? Because it's as opposed to buy the low of the day, because the number of times we can cover 5 points or 5 points above the low of the day is exponentially higher than the number of times we can cover the dead low of the day, right? Thus making you more money over time, because that 5 points over and over and over and over again is really going to add up and make you some money. But you have to look at it from an inverse perspective, which hopefully has some clarity to it as opposed to additional confusion. But be that as it may. Okay, so I got a few more minutes here, so I'm going to go ahead and look at the trading room overview. Okay, and we see the Yen-Q dipped it or did a little head fake up through that level of resistance that I was talking about earlier, that we were keeping an eye on. With the high of 52, right? So the sell at 45 with the stop at 65, that trade or that position is still a reasonable bet. But the one thing we don't like is that it did violate those swing highs we've been keeping an eye on since 12 o'clock. So what we're going to be doing here, folks, going into the final hour before, as I hand it over to, I'm not sure if it's Danielle or Raghi, but we'll be looking for a 5 to 7 point bump here in the S&P. And if that stops at the swing high of 38.42, we'll be looking for everything to curl and kind of head back down towards the VWAP here in the S&P, And if you do take that short in the NQ, look for that to come back to scratch on the day, which would be 77 points, 80 points, right? So as we roll over here, here's what you need to look at. So that'll be it for me, folks. Hopefully you guys learned a little bit today, and hopefully you'll retain a little bit as well. Pretty good session overall. I think I did a lot of teaching today. So some good stuff to remember. So again, I will go ahead and step out of the way for either Danielle or Ragi here. Have a wonderful day. Again, newsletter comes out Wednesday morning with the fresh HVA. So I encourage everyone to sign up for that. And we've got some good sections in there as well. Some good stuff to know, our stock picks, etc. So sign up for the newsletter and you'll get all that ASAP. So everyone have a wonderful day. It's been a pleasure as always. And I'll see you back in the futures room on Wednesday